So, hello, and a massive hello to everybody. This is 50 Pips rocking and rolling, 2nd of January 2017. So, I hope everybody had a great holiday season and that everybody is ready, refreshed, and ready for the new year. Again, hope everybody had a great time and wish everybody the best. So, before we look at the charts, something I just want to keep in mind is that everybody keep in mind is that remember, there's a lot of trading to be done this year, right? So there's really no need to jump out of the gate all guns blazing, going crazy. Give yourself some time to settle back into the swing of things. Don't take the bad habits from last year into the new year. Don't take your biases from last year into the new year, right? Just try and aim on slowly easing into things. And again, the plan as always should be trying to do things better than we did last year, always growing, always getting better. Now, as we always say, what a lot of people don't tell you is that trading is, and again, not to go on to a rant, but trading is an extremely hard way to make a living for a number of reasons. I'm not going to go into this in detail, but you just have to look at the latest CTA's hedge fund rankings to get a feel of what the pros' performance has been in recent years, which is again a far cry from the glory years. I mean, that's a discussion for another day, but just again, it's not easy, right? It doesn't mean it can't be done. What we always say is just don't let anyone give you the false impression that this is easy and that there are shortcuts. But of course, it can be done. And remember, a lot of people seem to be obsessed with absolutes, right? And we really feel this couldn't be further from the truth. So what that means is that, there are a lot of people that make money, break even, and lose money using a multitude of different strategies in different ways, right? There's not only one way or not only one system for trading, only one way, one system to risk manage, et cetera, right? What you have to find and concentrate on is honing something that works for you, filter out the noise. And as we say, you're trying to create your own ecosystem, and that focuses on positive reinforcement of key concepts and practices, and doing that in a live environment, right? And if you're still struggling with that, I really, for the new followers, you might want to take a look at the if you want to continue improving on your game, or if you're struggling a little bit with your market awareness, you might want to consider the foundational webinar series, or taking a look at the daily webinars we have, the weekly webinar group on the site. And again, not to plug, but I just think that you'll get a chance to try and make things a little bit easier for you, right? So the foundational session is about over 9 hours of recorded webinars that really set you up from A to Z, and the webinars we hold daily from Monday to Friday, right? That just really gives you the opportunity to see these concepts put into practice in a live environment, helping you to internalize these teachings. And again, if if you're interested in trying to attract investor capital, trying to do things in a little bit of more of a professional manner, right? Giving yourself a bit more structure, I'd urge you to take a look at the 50 Scouts or the investor capital section on the site. So enough of that. I don't even know why I got into that. Might just excited to be back for the new year. Okay, so let's get back and look at those charts. It's going to be a long year if I get sidetracked so quickly. But anyway, so what's going on here? So we should be looking at the SPY, right? So I'm just going to go through some of the charts because we'll have to see how the year opens. How everything goes with Trump, how's the markets digested things over the holiday season. But we're just going to start to go look at some charts that we've marked up from last year just to get back into the swing of things, right? So what we were talking about here on the ES or the SPI, we'll look at SPY, we'll look at the ES in a second too if it's marked up. And all things we're saying is that after that big ramp, right, we could easily see very healthy corrections, right? Whether that's a 3-4% correction or 6-7% correction, and still hold, right, a possible grind higher all the way into, until Trump gets inaugurated, et cetera, et cetera. So, and you see, it's all about not trying to chase highs. So going into the year, it's the same thing. It's just a little bit of profit taking. These are the two main supports we're looking at, and we think that it would be healthy to continue to see a little bit of a pullback before we grind higher, should we need to grind higher. And the two pivotal levels which we're looking at, right, are these two breakup points, which are going to be the bull bear lines for action, right, on the way down. If we get there, bullish above, bearish below, and once we get into the next level, if we get to the next level, bullish above, bearish below, right? So that's healthy little move there. Very similar action on the Nasdaq, right? When we talked about how it had been weaker, and to us it felt that there was a little bit of a stop hunt, and that if it failed to hold above this breakout zone, we think we'd get a healthy correction, you know, possibly all the way back into the 116s. So this is really the bull bear line to watch going into the open again tomorrow. IWM, which has been our favorite short, just simply because of the extreme rip we've had, right? You know, we had that, I'm not going to say ridiculous move, but very aggressive move, you know, almost up 21%. And what we were looking at, trying to put things in a little bit more into context, once we'd failed here, we said, you know, we don't know what's going to happen, but we like to look at, you know, support, resistance, levels at which we're wrong on a hypothesis, and levels at which we're right, or trying to play for some kind of healthy move. And all we'd said is this was the first interesting opportunity for us on the way up to really try and fade this. And what was interesting here is that, you know, you had about, in this zone, you had 1.5% risk, 1.4% risk. And if we rotate it back into the breakout zone, you got 7-8% to the downside, right? Profit targets, you know, whether you're looking at these levels, it doesn't mean, but this is really a very nice example of what we're looking at, right? Failure at new highs, market chopping around here, and an opportunity to play this with an asymmetric risk reward, right? Whether you're looking for a bigger correction or a smaller correction, these are the kind of areas we're looking at. And again, this is going to be interesting to see what's going on here. You know, there's a lot of room to correct on the Dow. We're going to look at in a second. If we looked at TLT, again, it looked to us like we're basing, and we think here there's a potential for a much bigger correction to the upside, right? So quite a healthy move. We'll look at it on the ZBs. Gold, also quite interesting. You know, we're very, very aggressively looking for this to bounce, right? And right here, we'll look at it on the GC again, but it's very interesting. You know, as long as it holds here, we think there's potential for a nice low correction higher, even if this is going to stay bearish. But I prefer to look at that on the futures contracts. Again, here, nice asymmetric risk reward on silver. We think, you know, this is one of the most interesting trades for us for 2017s in terms of swings, trying to get long here. Might need to see it a little bit lower, but, you know, we like anywhere inside, you know, around a break-even price, building some kind of long exposure with a break-even around the 14s, right? Or in any case, sub 16s, where we think that's a very interesting level. Crude, we'll look at that on the CL, but a lot of people looking for this to base, different charts showing inverse head and shoulders, so people looking for this to pop. Euro, again, well, let's get back on some of the futures contracts we're doing. So ES, again, that was the same one. NQ, very similar. You see how we're hovering here into support resistance. We'll have to wait for these to open. The Dow, you know, what was everybody's going on about the fact that we had to break the 20,000? You know, what we said is, you know, nothing has to happen, right? So it's almost like too good to be true if they don't take that out. So, you know, chances are they're going to try and take another stab at that sometime this year. But again, at those highs, the risk reward is really favors looking for the downside, right? The whole point is, you know, what are you going to gain trying to play for the stop run into 20,000? Or, you know, it makes a lot more sense to try and get short, try and play for a little bit of a healthy retracement. And again, you know, that's a very, very similar chart. Let's get on to, you know, the ZBs. What's very interesting here, and we put this chart in to show a little bit more context, you know, with the different standard deviations here on this channel. And again, it looks like it's trying to base. So I'd say, you know, as long as any kind of rally can't make it back above this 156, if you want to call it even 154 to 156, right? Yeah, rallies that get sold here, you'd expect this to be just a slight corrective move for a retest lower. But if we start to get back above, 55, 56, etc., we would not be surprised to see a much bigger correction, right? Keep in mind, even if you're, you can look at it with moving averages on. Actually, we can put something up. We can put some of these up. So you see here we're right basing at this 50. The other ones are all the way down at the bottom end of the channel. But if you're starting to look at something like the weekly, right? Just the opposite picture, you see how we could easily bounce all the way back up into the 66 to 62s, right? So, and then it can continue to move back down. So just try and keep in mind, it's all about trying to play risk reward, trying to play healthy market moves, and trying to play for what happens the majority of the time, not what happens the minority of the time, right? So GC, again, interesting, very, very interesting level for us here. Looking at it right now, we still thought that trying to build some kind of a long exposure here made a lot of sense. Downside risk for us to move back into the 1100s, but we felt this is a very interesting zone, especially as we get towards the end of the year. Going into this year, seasonals for gold tend to be pretty decent in January, so I think there's a decent opportunity here that we get a bounce. Primary targets would be 1200s, 1250 would be gravy, but both these are still corrective moves in a bearish trend lower. But again, this is a very interesting chart, like the other one on the IWM, shows really the kind of things we're trying to focus on. CL again here, as long as we hold back above these hold 50, 51s, you probably expect market to try and take a stab somewhere back above the 60s. I'm not a big fan of trying to get short, but if we can't hold this breakout, right, and we start to trade back heavy, we start to get back below the 51.50s, then I think it'll probably be a nice little short. But for now, it looks like it's still trying to rotate higher. So again, that's pretty much where we are for the year. I think some interesting, it's all about this dollar move, right? And here it's another thing. We said, as we're hovering at highs, it doesn't mean the dollar is not going to continue to stay strong, but the way the market is pricing in Trump and everything, it's all pricing in so many variables, and it's pricing in that everything's going perfectly, and that goes for the move on the bonds in terms of rates, that goes for the moves on equities, and that goes for the move in dollars. So all we're saying is that even if if Trump and everything delivers the same way the market is pricing it in, it's going to be very hard for the market to over-deliver. So that's why we're talking about some kind of corrective moves. And even here, on the dollar, we think that it's be a lot healthier to see it trade back into the 100 rather than back into the 105, right? So that's pretty much where we are, what we're looking at. We think there's a decent. That's a bit of a mess in terms of feed. Let's go on the yen. Yeah, this is very interesting. It's a similar discussion as we said. We just don't understand why you'd want to get aggressively long yen here. If you're trying to get long, we'd much rather wait for a pullback. But here we think the asymmetric risk reward is clearly for it to try and struggle here and possibly try to pull back. So again, there's nothing spectacularly new, right? I think the main messages were pretty much where we left off last year. Are we going to get a healthy correction on equities? Are we going to get a healthy correction on the dollar? Are we going to get a healthy correction in the metals? Are we going to get a healthy correction in the bonds? Keep in mind that the moves were so extended that even a healthy correction could still be quite aggressive, right? So that's what we're going to be focusing on. That's what we're going to be looking at. And again, there's no rush. There's a lot of trading to be done this year, right? A lot of people are going to be getting back from holidays, so there's plenty of time to get in trouble. If you're going to get in trouble, don't don't hurry to do it straight away. Again, hope everybody's had a great time. I wish everybody all the best this year. Remember, like we, like the saying goes, like in they say about golf, or life. It's the same as for trading. Most of the wounds are self-inflicted. So just try and work a little bit harder at having more realistic expectations, and as we all do, try to work a little bit harder at inflicting less wounds upon ourselves, right? Which we're bound to do, but as long as they're just flesh wounds, it's okay. We're back to fight another day. Thank you once again to all the guys who contribute on Twitter, who comment, who share, who retweet the content. It's always very much appreciated, and let's hope it's a great year for everybody. So looking forward to see you back online. I'm back ready to go, rested, refreshed, firing on all cylinders. I hope that's the plan. So again, great to be back. I was very much looking forward to this, and talk to you guys soon. Take care.